Good afternoon, welcome everybody. Um, Harrison here. So that's my first time recording a video because I have been talking to a few friends that I've brought into cryptocurrency in the past few months, coming from before $20,000 to today or last week. And because of that, I've been asking myself, hey, how about you guide these people maybe into getting less risks in their investment because the market today is a little bit extended? We are not sure if we are entering a bear market or not, at least as of today. Market structure has not been broken just yet. We had a big dip, yes. It is an opportunity for buying more if you still believe we are still in a bull trend. In order to confirm if we are in a bear market, we may need to wait a little bit longer for a confirmation on that bear market, but I do not believe we entered one just yet. However, time will tell and we'll see. And because of that, I do not want my friends to get burnt into getting into cryptocurrency, and I advocate for cautious on their side. So I started to think and try to find solutions for them to not be overextended in that market that may drop more. But it could reverse, which means, well, maybe if they put a lot of money today, they will be filthy rich in a few months. But who knows? The thing is, nobody can time the market. And I would say, be cautious, make a little bit less money, but do not lose money. And so on that note, I pushed them to look into the dollar cost averaging into Bitcoin or any other cryptocurrency they feel like investing in. Now, why would I think about this? Today, cryptocurrency is a blessing in disguise for anyone that wants to invest in dollar cost average. Because contrary to popular ideas, you do not need to buy a full Bitcoin. If you want to buy $10 worth of a Bitcoin, you can, which would give you 0.0000, etc. Bitcoin. Yes, but that is still a $10 investment. You do not need to drop a $36,000 investment on Bitcoin as of today, the price of Bitcoin being $36,200, give or take. So, because you're allowed to do that, I thought to myself, all right, how about creating a new portfolio in my long list of portfolios into crypto dedicated to dollar cost averaging into three cryptocurrencies: Bitcoin, Cardano, and Ethereum. So, in order to illustrate you what I mean by dollar cost averaging, here is a website I'd invite you to look into, which is DCA BTC, dollar cost averaging Bitcoin. Here, let's pick a date, and on purpose, I'll pick a date which is not the top, but it was around the top of the bull market of 2017, where the price of Bitcoin was around $20,000, give or take. So say you are a new investor in Bitcoin, you decide to buy some. You have two options. You can drop a lot of money into it, or you can decide to dollar cost average. Your budget is $10,000, give or take. So you could drop $10,000 at around $20,000, or you could put $10 a day or $300 a month, or you choose the amount you want to drop into Bitcoin and see what happens in 3 years until from January 2018 to today, so a little bit more than 3 years. Anyone dumping $10,000 at around $20,000 may have had exceeded the market already, because Bitcoin retraced all the way to $3,000, give or take a couple of $100. I believe that anyone putting $10,000 at 20K either kept it, closed their eyes and never thought about it, or ended up selling it and cutting their loss. That would have been a loss in their investment. Now, let's take the second case, which is dropping $10 a day for 3 years and a half, give or take. This would have brought you to a total amount spent of $12,530. With that, your value in dollars would be $12,530. Your investment in Bitcoin would have been $60,574 with a maximum of $100,000 in the 15th of April 2021. But for the sake of this example, we will believe that you'll just keep on putting $10 from today onward. Now, when you look at that chart, one could say, look, here the orange line went below the green line, and that is true. So at some point, Bitcoin was below the US dollar. And that's the purpose of that DCA idea. At some point, you may end up below your initial investment, or at least the entire investment you had up until to that point. But because you DCA into it, you will buy at a lower price, which means as soon as Bitcoin goes back up, your investment will start skyrocketing overall. And as you can see, overall, yes, you dipped for a few months, and then you ended up hovering over it, not by much. You dipped again once more, and that was it. Then you took off. So the idea of DCA works especially well with Bitcoin. And I could just go beyond that specific date of 2018, January 1st, and go like, let's say 4 years ago, just 4 years ago, if that wants to work. Yes, which would have brought us into June 2017, where now your investment would be worth $80,000. We could go 5 years, which would bring us to 2016. And as of today, your investment would be $260,000. Now, please mind that the volatility of Bitcoin is dropping over time, which means that if you start doing it now, you will not see this kind of return on investment anymore. Could happen, but to be honest, do not count on that. And if you, by any chance, end up making over 4 years, let's say, $40,000 return with a $14,000 investment, that's still a great investment regardless of the drop in ROI. Now, what I decided to do, as I explained, was to put that money into Bitcoin, Ethereum, and Cardano. I could have put more coins, but it would have been too big of an investment overall for me to do so, because I do invest in, I do have other portfolios. To illustrate it, I do have a yield farming portfolio, which is in the DeFi area. I do invest in launchpads. I do have a long-term investment portfolio. I do have an interest type of portfolio, a swing trading portfolio, and a leverage trading portfolio. And all of them, I decide to split them from one another, because I do believe that you need to have different portfolios that do not interact with one another. Because say you have made a huge loss in your leverage trading portfolio, you could decide to take some money from your dollar cost average Bitcoin portfolio, and then you would literally massacre all your benefits from that portfolio. So I tend to split them and never have them to converge with one another. Now, one would say, well, look, if Bitcoin drops a lot, why won't you just put more money into Bitcoin instead of just $10 a day? And I agree with you. So that would go into my long-term portfolio. I would take from some of the dollars I've put on the side, I would drop $1,000 right away into Bitcoin, but it wouldn't count into my DCA portfolio. I'd rather keep them split and then just make sure that I do not have them interact with one another. Now, let's get to looking into the investment itself, where I did, as you can see here today, my first investment into that portfolio, I did buy $10 here of Ethereum, Cardano, and Bitcoin. See, 10, 10, 10. It doesn't look like a 10 because the broker, the exchange Binance, is not able to get 100% to match my demand with the offer on the market, which means that you may end up with a bit of a discrepancy between what you ask for and what you get. It's very low. You see it much more on a small order, but if you put $100, you'll see you'll still have 99 point something. Okay. Here you have the fees, which are in Binance coin, BNB. That is just, we'll explain that for another day for those that do not know what it is. But basically, every time you transact, you need to pay a fee. And on Binance, you can choose to pay in BNB, which would put a little bit of a discount on it. So we did end up with 0.00370 Ethereum, 5.87 Cardano, and 0.0000274 Bitcoin, or I think it's 27,400 Satoshis. Satoshis being the decimal number. And with Ethereum, we would call that Gwei if I am correct. I never really used that, so do not quote me on that one. Now, what we want to look at is buying this coin every single day. I will track that here on the sheet that I created in Excel for now. I'll try to get something better over time, but for the sake of following up today, let's do that. And as you can see, you have my transaction here, Cardano, Ethereum, how much I spent overall, the value it's worth today, and the discrepancy between what I spent and what it's worth. So we can see along the way the performance of that portfolio in Ethereum, then Cardano, then Bitcoin. I'll try to have some charts and everything to make it look better over time. One thing we will work on with this portfolio is obviously we are looking into dollar cost averaging in buying, but that doesn't mean we will not try to catch interests through lending our coins to either a lending platform like Celsius. We could do it on Binance itself. With Cardano, we could stake it into a wallet to help the network work, such as on the Daedalus wallet or on the Yoroi wallet. So we will look into these, but because transactions in crypto cost money, you need to pay fees to do transactions. You need to be aware of that. You cannot transfer too little amount of money. That would take away all the investment you would have done today. For instance, a BTC transfer would cost you around $20 today, I think. So sending $10 and paying $20 in fees doesn't make sense. So we will need to get much more Bitcoin before we do our first transfer. Now, to answer one last question, which is why are you using that method to buy coins? Why don't you use a credit card and do daily purchase? The answer is simple. Paying with a credit card is a great idea, but it costs money and fees for you to use a credit card. And on average, an exchange would ask for a $10 fee in order to cover what I need to pay to the credit card company for any transaction until you go beyond a certain amount where they'll ask you in percent between 3 to 4%, give or take, depending on the country, the bank, the exchange, etc., etc. You need to look into that. But $10 being the minimum usually, so paying $10 to get $10 would not be worth it. So I decided to buy a bulk of USD coin, actually USDT, Tether USD, so that I could buy my Cardano, my Ethereum, my Bitcoin every day. So we'll follow on that journey and look into how that portfolio looks like. Obviously, one last point, sorry, but I keep on rumbling. We will discuss about all the aspects of fees and security in cryptocurrency, because as of today, many people are falling for scams, many people are falling for rug pulls, or they are simply losing their password, forgetting their account, and all these things need to be addressed, especially for those that come from a background where they just are used to their bank taking care of everything, and they never lose money because the bank would cover a mistaken transaction, etc. Here, if you lose your coins, it's your own problem. Nobody is going to pay them back to you. So on that note, I'll leave you to it, and I'll see you next time.